Are we in the housing crisis part two? Well, depends where you look. You came here for the truth, so let me unveil that for you. In today's video, we are going to look at what's happening inside of real estate right now today. There's a very big problem, and we have to focus on that and understand it, and then sort of zoom out to understand the full picture. Because if we just keep our heads focused on one point, we have our blinders on, we're not going to see the full picture. I'm going to show you that today, beginning with this. Look at it. Barry Sternlicht warns of more bank failures every week, maybe two a week. Can you believe this? So he's on this interview, this billionaire on the interview with CNBC, all right? And he's not mincing words. There's no question about that. You could see it in this. There have been bank failures before. I think it's pretty obvious that banks do fail. It's not the first time we've seen some bank failures. To expect more wouldn't be out of the ordinary. But here we go. Industry experts have warned about potential issues at regional banks due to underwater real estate loans, with some predicting consolidation of banks in the coming years. So far this year, there's only been one bank failure, Republic First Bank, in April. He's got a hard task with the blunt tool, and the consequence is real estate markets are taking it on the chin because rates rose so fast. We could have handled this, but we couldn't handle it this fast. The $1.9 trillion of real estate loans, that's a fragile animal right now. All right. Lowering interest rates could help alleviate the pressure on these banks by increasing the value of their assets. So what happened during this time was you had interest rates that were super low. And so you had companies like SVB, Silicon Valley Bank. They were buying mortgage-backed securities that were giving some return. If you were on this channel, you may remember I was talking about the negative interest rate bearing assets, okay? I always, trying to struggle for the word of what they call that. They call it an asset, okay. But basically, imagine you're buying a bond from Germany or wherever. It was actually giving you basically nothing in return, or negative. And so these companies, if you would say, well, why would they buy that? Well, they had to look around and they would say, okay, we need some return. Why do we need any return? Is that because they're a corporation, this and that? No. They have to give their clients something, right? Okay, you hold money with us, we give you a little bit of something, right? I mean, even if it's a small amount. So they have to make more than that in order to give that to you. They got to make money somewhere, right? And so they were getting these mortgage-backed securities. Now what happens? Well, interest rates start rising. So you remember that stuff we bought during that very super low interest rate time frame? Yeah, well, that stuff has much less value today. And so we can take the loss, sell right here, or we can hold on to it until maturity and make that little bit of cash. So they were in this dilemma. A lot of companies found themselves in this predicament, these financial companies, because the times were 0% interest rates. And then things change really fast and they go, uh-oh, what do we do now? That's what's happening right here for a lot of these financial companies. That's what he's talking about. That is the concern, all right? That's not a rant, that's an explanation, all right? So you could see Powell recently acknowledged that mounting bad commercial real estate loans could cause some bank failures, but maintained that the overall system, of course, not at risk. The Fed is working with lenders to ensure that they are prepared for potential losses, and financial regulators are closely monitoring the situation, just like they were in 2007 and just like they were in 2008, right? No reason to worry. So let me show you something. You could see some banks either fail or at least, dip below their minimum capital requirements. Most of the banks aren't insolvent or even close to insolvent. They're just stressed. That means there'll be fewer bank failures, but it doesn't mean that communities and customers don't get hurt by that stress. All right. So what's happening here is we have regional banks, smaller banks that are in the biggest trouble right now. No question. And in the end of this, if you just like, okay, well, what does that mean? That means the JP Morgans and the Goldman Sachses and the Bank of Americas and all the big establishments will be buying the assets, the good assets of these companies that fail. So you have a consolidation of power and control into the hands of the few. The same shareholders of the Federal Reserve, oops, not allowed to talk about the Fed, forgot. Okay. The shareholders of the Fed are getting richer and attaining more power. What is the significance of these? They're small. So why are they significant? Well, they're small, but actually an overwhelming majority of the loans that are happening with commercial real estate. Think office, think malls, think all of that. That's done with these regional lenders, the so-called small lenders. So that's where the biggest pain is right now today. They collapse not into nothingness. It collapses into the lap of JP Morgan. This is where we have an issue. Why the Fed expects more bank failures. The Fed itself is saying it. I just wanted to make that clear. Jerome Powell has to say one thing or whatever, but you see these Fed reports that come through and so on. They're not excusing the fact that, what they're doing with interest rates does create a problem. There's no question. Toronto has a concerningly high number of condos sitting on the market. Now, this is just funny to me, but there are cranes scattered across the skyline. Way more condos are going up. And let me tell you, they will be bought. I could see those being bought, but they'll sit empty. So this is it's a weird scenario. We'll see what happens. Depends on interest rates, depends on things. And of course, a lot of them are actually being sold right now, or at least they're trying to be sold because they have to sell prior to the new tax laws that come into effect in June. Delinquencies of floating rate office commercial mortgage-backed security loans hit 20%. Fixed rate loans at 4.7%. So it depends on what you look at there. Floating rate or variable rates, depending on the country. So if you look at it in the United States, different story. A lot of people in the US, they don't understand this. So a few things. When you look at the way real estate is in the United States, I can get a loan for 30 years and pay one interest rate that entire time. In Canada, in Australia, and a lot of other places, it's actually every, let's say, 3 to 5 years where I have to then go back and, go back to the bank. Okay, I need another loan for 5 years. What's the interest rate now? This creates a problem for people during those times. In the US, it's way better. Okay, because if you got it up here, but interest rates went down to here, I can always basically renegotiate. I can break that contract, and it's okay. There's a way to do that, right? To refinance. But the problem here is, when interest rates are moving down for years and years and years and years, people were just saying, variable rate's the best. I'm always going to get a cheaper thing at the end of that 3 to 5 year period because rates keep going down. And then rates went up, and a lot of people were like, hey, wait a minute. They're not going to, I know a lot of people, even in the financial industry, that were saying rates would never go up. Rates would never go up. A lot of YouTubers, never mind, were saying rates will never go up. Then they started to go up. They said they're not going to do it. They're not going to do it much. Their subscriber numbers kept going up along with the interest rates, but that's okay, right? Because nobody knew that would happen. Regardless, looking at this here, you know that there are going to be more failures. It's a simple matter of fact. I wanted to stress the fact that we're not at the financial crisis, housing crisis levels. Additionally, commercial mortgage-backed securities, or commercial real estate, I should say, is generally on a shorter time frame. You're not getting, 40-year loans with the commercial stuff. You're going to get shorter time frames. That paper is constantly being rotated over. Nobody's ever paying that debt. It just gets renegotiated all the time. Okay, that's the way that works. This is just showing us, comparing the overall delinquency rate. It's still like it's nowhere near the bottom, certainly. But you can see we're way off the top, but it has accelerated. Okay, so keep that in mind. Office loan defaults near historic levels with billions on the line. Office is in such a bad circumstance. They're not paying it back. Okay, you've got loan defaults, foreclosures, or other forms of distress at the highest amount since 2012. And that tells us that there is a very clear issue going on today, and there's tons of cities where this is being an issue. And this is showing us an apartment complex in Tampa, Florida, sells at a massive $32 million loss in just 2 years of ownership. The previous owner paid $115 million. All right, they sold it for $83 million. That is a problem. All right, but the bad YouTubers would say, well, this is an opportunity because you can do tax loss harvesting, right? Or that's like punching somebody in the stomach and tell them it's a great way to, I don't even know why. I don't know. Anyway, I'm so upset with the terrible information that's being fed to people. Anyway, you need financial education. I have tons of that free on my website. Go to Compass. Go through Compass, get the free information. If you know it already, share it with your friends and family, because in that, it doesn't link to my YouTube, doesn't link anywhere else. Nobody would even know that I'm a YouTuber. If you go to that, themoneygps.com/compass. Get that financial education. We need that. That's number one. Get out of bad debt as best you can. Do you know somebody in bad debt? If you can, try to help them out of the bad debt. Okay? We need to renegotiate our debt as best we can. And by the way, I just talked about this with my Finance Friday crew. All of the services that you have, whether it's energy, I told people over and over again during 2020, as I saw what was going to happen, I said, go to your power company right now and negotiate the best deal you can and lock it in for as long as they'll let you lock it in for. People were messaging me after that and saying, if you didn't tell me that, and if I didn't go through with that, because of course it's up to you to do it, I would have been in big trouble. And I'm so grateful that I have my voice out here to do whatever I can. And that helped people, and that makes me feel really good. Do what you can, okay? That's all I'm going to say. Just do what you can, okay? It's going to be, we're in for tough times, okay? All right, take care.